So, like Sam said, I'm the Chief Operating Officer at JMT, and I've been working with nonprofits on back office technology and software for over 20 years. And I spend most of my time thinking about things like this because this is what we do at JMT, and this is what I've really been focused on professionally my entire career. Most of you on the line have worked with JMT in one way, shape, or form in the past, but for those of you who may be new, we've worked with over 2,000 nonprofit clients across the country over the last 26 years. We have 30 professional staff between 3 offices in New York, Tennessee, and Texas. And ultimately, what I hope you walk away with today is that you understand that we're your partner, not just for the short term, but the long term, and that we are really thinking in terms of a lifetime success in the back office for your organization. So what we're going to cover today, we'll talk a little bit about some of the environmental things that may be affecting your organization, including changes to requirements for nonprofits coming down from the regulatory bodies. I also want to explain, since this webinar is really about the business process review service offered by JMT, I want to explain what that is and why it's important, and help you understand better whether now is the right time for a BPR for your organization. We use BPR for short, for business process review, so you'll hear me shorten it that way throughout the webinar. I want you to understand where we hope and expect that you will be if you do complete a BPR with us. There's definitely, obviously, we're going to give you recommendations as part of that, but just kind of paint a picture of that for you and talk a little bit about a case study of an organization that we've worked with in the past. Finally, we'll wrap up, and if you want more information or want to discuss it further, we'll discuss how to get there. So with that being said, let's start with evolving nonprofit requirements. I'm going to talk first here a little bit about the regulatory environment and the changes coming from the FASB and other sources that may be impacting your financial reporting and other business processes at your organization. But evolving requirements sometimes happens whether those people are doing anything at all or not. Your organization is evolving, you're growing, you're getting involved in new programs and services, you're getting out of certain programs and services, you're taking on new funding, you're seeing other funding dry up. And all of this affects how you operate, how you report, how you do your day-to-day in the finance organization. So it's really important to be thinking about your organization as operating in a fairly fluid environment where you have a combination of external factors that are affecting your business requirements as an organization, as well as internal factors and the dynamics and leadership and everything else about your organization that can change your status quo as you move through this. So one of the things that is a constant, however, is the fact that we're all in the nonprofit industry expected to do more with less or with the same amount. And so you have to figure out how to get by, even when you don't necessarily have additional resources or substantial material additional resources available to you. So it's really, really important to make sure that you've got the infrastructure in place that can adapt as you change. And for most of our clients, we make sure that that's a prerequisite when we make recommendation about tools and technologies, is that those have to have the ability to scale with you. They have to have the ability to adapt to your changing requirements. And most of the time that works out, but sometimes that change can be so drastic that the assumptions underlying those original recommendations have to be re-examined. But it is really important that you not lock yourself into a situation that forces you to change in a fairly near time frame to something different, because nobody likes going through a major back office change like that. So what are the changes coming from the environment that may be impacting your organization today? So first of all, let's talk about stuff coming down from the FASB. Well, they're changing the reporting model for net assets classifications, as well as some other treatment of various types of things, including capitalization and requirements around documentation and disclosure of internal controls, particularly around procurement. These are things that auditors are going to be looking at with much higher level of scrutiny. And you know, we've been reporting a particular way, particularly as it relates to the statement of activities and the presentation of the nature of donor restriction on net assets for a long time. You know, it's been 20 years since they last made changes like this. So we're very much accustomed to a particular style of financial reporting at nonprofits, and this is all changing, as well as some of the more nuanced things that contribute to the numbers that are presented in those financial reports. It's also important, and the elevated importance of improving visibility to financial and mission performance within the organization. So mission performance is, you know, how are we executing against that mission? Do we have any quantification of the impact? Any other outputs and outcomes that we can report on? Those are more future-looking requirements as opposed to current requirements from the FASB, but these are things that as time goes by, when people are evaluating the performance of a nonprofit, whether it's an auditor or a potential donor, they're going to want to understand not just what the dollars and cents are in terms of revenue and expenditures and your statement of financial position, but they're going to want to understand how effectively are you executing with those funds that you're taking advantage of. And so the combination of the FASB requirements change, as well as the federal government's new uniform guidance around government grants, is creating a variety of reporting and performance tracking and technology requirements. To a certain extent, there's got to be a communication of information in a machine-readable format to the federal government rather than just providing a report. And so all of these changes are impacting what the problem is that we're trying to solve and finance at nonprofits each day. So these are just a handful of the things that are external to your organization that might be affecting your sense for whether or not the system is serving you correctly. And so let's talk a little bit about what the business process review is and what it's intended to solve for you. So, you know, this is something that I think, and I've been saying for, gosh, for as long as I can remember, that it's really, really important that every few years, your organization take a step back and look at your systems and processes, not just keep it on autopilot, but look at it with a critical eye and say, is this still working for us? Is it giving us what we need in order to be successfully delivering on our responsibilities as a finance team and as an organization? You know, ongoing investment is something, you know, what I wish it were true that you could say, you know what, we're going to spend a bunch of money, we're going to implement a new back office accounting system, and we're just going to be able to put it in place and it's going to work equally well for us on day, you know, on year 7 as it did on day 1. But we all know that that's not possible. So it's really important for us to be constantly being mindful of the need for ongoing investment. So as we look ahead, you know, when you first implemented it, you know, it was shiny, it was new, it was exactly what you needed. And this is kind of a joke here, but the idea is that, you know, that car seemed perfect when you first got it. But over time, and then without regular maintenance, without, you know, replacing parts that aren't working right anymore, without upkeep, everything will eventually degrade over time because your requirements are changing. In this example, you might have gotten rid of that thing because, you know what, we had a bigger family. I had 4 kids that needed a seat, and so that car was no longer sufficient. But it's really important that you be looking at it with the same kind of perspective, that you're looking at as, okay, this is the right thing for us, and we're buying a system or putting a set of tools and processes in place to get us what we need today, but we need to make sure that they also have the ability to adapt and scale as our needs change. So that being said, what does that maintenance entail? So first of all, we've got to make sure that we understand our business requirements and what we need so that we can evaluate our systems based on what we need currently and what we need going forward. So sometimes this is hard to find time to do. When you think about it, all of us have day jobs. All of us have 40-hour week plus that we're doing our job description. We're processing transactions, we're reconciling, we're producing financial reports, we're going to meetings, we're dealing with vendors, we're dealing with all these different things that finance is responsible for. Taking a step back and actually looking as objectively as we can at our situation and our requirements is hard, and it requires blocking off time. So this is something that you know, really takes a concerted effort to make happen correctly. Second, it's important to not just ignore it when you have processes that have degraded and have become inefficient over time. So, for example, you might have a situation where you had some transactions originating from an external system that were only 2 or 3 a month. At the time, the easiest and the right answer was to just key those transactions into the accounting system, because you know the time and expense and overhead associated with building an interface with that system, you know, the ROI wasn't there at 3 transactions a month. But since then, maybe it's up to 30 or 300 transactions a month originating from that other system. And if you're still keying them in at that stage, that's a huge efficiency loss for your organization. So those are the kinds of things that you want to be on the lookout for. And chances are, if you have something like that, you know exactly what I'm talking about, that there's duplicate data entry and other things like that taking place that are a burden for somebody, or that they're a real time sink on a recurring basis for people on your team. The other thing is to really understand what you have in front of you. So when I worked for MIP, which is now Abilla, years ago, we did some surveys and studies with our customers, and we determined that on average, MIP user was using about 20 to 30% of the capability that they had licensed. So between the various modules that they were using only 20 to 30% of the capability that was available to them. And maybe that was the right ratio at the time that they initially implemented the system. But it's important to understand what is possible. What could I be doing with the tools that I have in front of me? Are there other features and functionality or approaches that we could be using with the tools I already have in my hands that could help me streamline, eliminate duplicate effort, or improve the timeliness and accuracy of information? These are things that often get overlooked. People will get frustrated with the system, saying, you know, gosh, this isn't really giving us what we need. Maybe we should look at something else. Well, before you do that, it's really important to stop and say, well, wait a second. Are we using everything that's in front of us to its fullest potential? So all that being said, it's really important that you consider this formal evaluation at least every 4 to 5 years. You should, and sometimes, you know, best case scenario, you come in and you get validation that yes, the system is still set up in a way that's serving us well, and maybe there's just a few tweaks that we need. But in a lot of cases, in our experience, especially for those organizations that have raised their hand and said, yeah, we really need this, is that there's been major problems to solve, and there are major opportunities to improve those systems and processes and better align them with what you're trying to do as an organization. All right, so when you're looking at it, these are the kinds of questions that you want to ask. You know, is the team spending time on these rote repetitive tasks? Am I manually assembling a report in Excel every month? Am I manually keying in entries that exist in electronic form in another system or in another place? Is there manual work? Are we doing paper and pencil processes when there could be a fully automated with system with an audit trail? You know, are there things that should be going through your system that aren't for whatever reason? You know, it's like, oh gosh, we do every piece of this workflow through the system except for this one. Why not this one? In some cases, those inefficiencies can affect the timeliness and availability of information to stakeholders in your organization. So your CEO or CFO, executive director, whoever is asking you for information, and you're not able to provide it as quickly as they would hope to have it, or they're getting your reports, but they're so far after the fact that they've diminished in value as a decision support tool. And then, once again, are you just getting that general feeling that this is not right, this is not matching up to what you're trying to do as an organization, it's not giving me what we need? Or sometimes you just become aware that there's other things out there that do certain things that you're not sure whether your system that you have today will do it or not. And so these are all things that should be part of your consideration. So the way the business process review works is that we work collaboratively with you and your team to come in, and we want to make sure, first of all, that we understand your organization's strategic direction. Where do you come from? What are you doing today? And where do you anticipate being in the future? Some organizations we work with are on a fairly radical growth vector. Others may be struggling with declining funding or changing circumstances that are causing them to have to contract in some way. And others, it's just they're doing about the same, but it's different things than they were before. But in any case, we want to make sure that we understand from the big picture perspective, what are you doing as an organization? Once we understand that, we want to go down into the tactical details a little bit more closely. What is the current workflow? What are you doing? Where do you feel like there's pain and inefficiency? Because it's really important that we understand that. Something that's not on this slide that's also important, but we also want to understand what works well. You know, there's your current workflow is going to have things that you're maybe frustrated with, but there's also, in every case, things that you're very content with or happy with that you don't want to see disrupted. So it's really important as part of our business process review that we understand everything, not just the things that feel broken, but everything that works, everything that you're indifferent about, everything that you feel needs improvement, so that we can put a holistic plan together for you. We're also going to come in and look at your current accounting system setup and design and see how well that maps to that strategic direction and your workflow aspirations as an organization. Because in some cases, like I said earlier, there's opportunities with the tools that are in front of you already to address some of those things. In other cases, it may be there's a module or an add-on, or there's in the most extreme example, it may be that yes, you've completely outgrown the system that's in front of you, and you really need to go through a more dramatic upgrade of technology. But it's important that we have all of that information on the table in front of us and collaborate with you in coming up with the answer. We're going to review that information with you and make recommendations. And this process is really designed to empower you to make a decision, not to foist a decision on you. And so we're going to give you a lot of information. We're going to talk to you about issues and implications of different paths forward. But the important thing is that we're trying to work collaboratively with you to try to get to that optimal situation. So this is really what we're trying to do for every single one of our clients. We want to make sure that you've got the ability to get as close to 100% of the reports as you need directly from the system without having to dump a trial balance into Excel, without having to do a lot of offline manual manipulation of information. We know there's risk associated with that. We know that's time consuming. So anything that we can do to help you get the tools and technology in front of you to give you this stuff automatically, we want to do that. Not only do we want to make it easy for you to get it, but we want that information available as close to real time as possible to the stakeholders in your organization, the managers, directors, executives, funders, board, whoever is the consumer of this information that you're producing. We want to get that information to them when it's the most valuable, when it's current, when it affects decisions that they're trying to make. That's extremely important. Additionally, we want to make sure that that all of your systems in your back office are working harmoniously. Most of our clients use a third party for payroll and HR processing. So you have a separate system where you've got labor costs information originating. Many of you rely on direct public support, so you have a donor management or donor database information system where pledge payment and other gift transactions, event registrations may be originating. Those of you in the healthcare business might have billing information coming over from an EHR system. There's any number of different places that accounting transactions and other financial information may be originating. And so we want to make sure that we understand that ecosystem and that we're helping you create appropriate level of interface with those systems to avoid duplicate data entry and to make sure that it's not a burden or an obstacle to timely completion of your monthly reporting activities. And finally, and this is the big one, everybody talks about this, but this is really a passionate thing for us. We really want to reduce or eliminate reliance on spreadsheets. If we can get somebody from doing 60% of their routine reporting in the system to 80% of their routine reporting in the system, that is a dramatic improvement in productivity for the organization. Because if you think about how much time it takes to extract the information and work with it in a spreadsheet and to double, triple check that information to make sure that it's correct before it gets into anybody else's hands, it truly is a burden. So if you can get to a point where the system is actually generating this information on demand, it's coming directly from the ledgers, it's not, you don't have any risk of human intervention causing these numbers to be incorrect. That's our aspiration with every client. We know that there's always going to be a handful of scenarios, particularly analysis and one-off reporting scenarios, where Excel will continue to be the right tool. But in the financial management of your organization, there's many other financial and managerial reports that can and should be coming directly from the system, not from spreadsheets. So once again, just kind of painting a picture of what are all these other applications. We've got our accounting in the back office, our GL, AP, AR, and other financial modules. We've got donor management. We've got budgeting and planning. That might be a different set of tools, or Excel for most of you. We've got these other financial applications that kind of bolt on to accounting, like expenses and timesheets and maybe a procurement system or a fixed asset system, all these things that are related to the accounting in the back office but aren't necessarily part of it. You've got HR management and possibly payroll coming from another system. And then you've got other things out there for workflow and document management and collaboration that may need to work with all these things. And so when we do a BPR for a client, we're going to look at everything. We want to understand how are all these things deployed, who uses what, how do they need to talk to each other, if at all, how are you doing it today, and what are we aspiring to? What would be the ideal given the unique circumstances of your organization? So this is one of those things. We have this part in here because the thing we hear the most from clients is that, man, everything you said is exactly right about our organization, but we're just so busy right now. This isn't the right time. Yeah, maybe next summer when we think we might be less busy. Well, I've got a little hint for you. You're not going to be any less busy next summer, especially if you're suffering from some of the symptoms I've been talking about. Chances are they're just going to get worse, and you're going to feel more overburdened, and you're going to be spending more and more your staff time and focus on some of these inefficiencies. So I would encourage you to really think about, is this the right time? So some questions that you really want to think about, is that, first of all, are we on the right technology? You want to probably sync up with you probably want to sync up with your IT and make sure that you really understand the technology plan for your organization. What might have been the best and most appropriate technology for your organization 10 years ago when you put your current general ledger system in place may no longer be in alignment with your strategic technology plan for your organization. So it's really important to understand what you're using, what kind of technology is it? Is this something that matches where we're trying to go as an organization? Sometimes, you might just not even have specifics in your mind. You might just have this feeling in your gut that says, you know what, this accounting software just doesn't feel like it's the right software for an organization like ours, or an organization our size, or an organization with our specialized requirements. And so it really is important to not just let that be a generalized feeling, but really try to get to the bottom of it and say, is that actually true, or are we just not using those tools correctly? Another thing that holds people up is just not really having any idea what, addressing these issues might take. So you might say, gosh, I know that we've got a horribly inefficient purchasing process. We're still using, 3-part forms and, 5 signatures on a piece of paper, but I really don't know what that, solution looks like. I don't have any awareness of the options or what's out there. And, ultimately where you feel it hitting your organization is that your organization is pouring your team's productivity into these processes that are very low return. You're doing it to address an efficiency issue, and you're throwing people at it instead of good systems and processes. And when you do that, that's very expensive, because as you get busier, you're going to wish you had that budget available, or that productivity to throw at more strategic issues, as opposed to these covering up these inefficiencies. So, and really, the most important question you should be asking yourself is that, okay, I know I'm wasting a bunch of time and working extra hours to do these reports in Excel and to rekey these entries, but I work for a nonprofit, and I just know that we don't want to waste money on that kind of stuff. Well, you should really think about it in terms of the benefits that your organization might realize if you and your team had that time freed up. What kinds of things could you be doing? What if you could get better information to your managers sooner? What would be the implication? What would be the benefit to the organization if you had that better information at your fingertips sooner? These are the kinds of things that will help you decide that it's time to move forward. The people that don't, and this may be some of you, I know to a certain extent it's been me during my career, is we fall back onto Excel. Excel is literally the answer to every problem in the finance office. If I can't do it in the system, I'll do it in Excel. I can track it there. I can build a report there. I can build an entire report packet for the board in Excel. I can make a dashboard for every manager in Excel. And that's the beauty of Excel. Excel is the most versatile financial tool in the universe. The problem is it's the most versatile financial tool in the universe and has very little automation. It also has, limited capabilities to directly interact with your data in your ledger system. So what we end up doing is we end up exporting information into Excel, and then we take responsibility for it from there on. And that responsibility not only includes responsibility for the veracity of the information, but responsibility for getting that information presented correctly and into the hands of the people that need it. And anybody who's spent a lot of time dependent on Excel for these things will tell you that it can be burdensome, especially if you're doing the same thing month after month after month, having to export, manipulate, present, verify, distribute. Each one of those things can be extremely time consuming, and there's risk at each step. So it's really something that you should be cautious about becoming reliant on it for everything. There was a study a while back where they looked at the average finance employee in a nonprofit spends 281 hours per year in Excel doing those things I just described. 281 hours per year. That seems like a lot of hours when you think about it. That's hours and hours a week. That's a lot of personnel time, if you want to think about it that way. So to really think about that, 281, that's a lot of hours, like I said, based on an average loaded salary of a finance employee. That's about $8,100 per employee per year. And so in an organization of with five people in the finance department, you're talking about potentially enough for another full-time employee in your department, or recovering the productivity of another full-time employee. So if you're thinking, gosh, we really need to add somebody on the finance team in order to be able to keep up with what we have on your plate, well, it may be that you don't need to add somebody. Maybe what you could do is you could get more efficient and get that additional productivity you're looking for from the team that you have that already knows your systems and processes, and it would save you the time and trouble of finding and onboarding a new person. So this is a real kind of tangible way that you can look at this and say, yes, maybe this is worth taking a closer look at. Jackie, our CEO, put this together a while back, but this is really something that you should think about, is just saying, all right, do I have any of these issues? And if you take this little quiz for yourself, if I'm unable, if any of these pain points are true, and you're definitely true all the time, you mark 3 points. If it's occasionally true, 2 points. But if you go through just these 8 items, and we could come up with a list a lot longer than this, then if your total gets to 12 or higher, you should probably, at a minimum, get a BPR just to see what you can do to address some of those things. But these are the things I've been talking about already. Unable to produce your financials from the system, using a lot of spreadsheets for routine reporting and analysis. Month-end close process takes greater than 5 days. Your time spent, you have a material amount of time spent in manual entries and correcting errors in the system. You're not able to provide real-time visibility for management, directors, funders, and other stakeholders. Your systems are not connected, so you're having to transcribe information from system to system, or you've got duplication of effort. Or your audit is painful and expensive because you're not able to give the information to your auditors as easily as you or they would like. All these things could be indicators that it really is time to look under the hood and figure out what's going on and see what you can do better. Another issue that's not on this list, but I think is really important to consider, is just how well your team is trained to use the system. So this is kind of funny cartoon on here, but this is all too true, and I'm sure many of you on the call can relate to this. When you first got your system, Jim got trained as part of the implementation, and then Sam joined later, and so Jim trained Sam, and then Sam trained Mike, who was another new guy that came after Sam, and then Sam left the organization. But then Mike is training Sam's replacement. And so what you get is, in some cases, people who are 3 generations removed from the original proper training on the system, training other people on how to use the system. And that's really results in a lot of information walking out the door with former staff. It really results in an underutilization of the tools. We've seen organizations that simply just stop using a module or a feature in the system that they have because the person that knew how to use it left and nobody remained who was really up to speed on it. And there's a lot of benefit and efficiency lost for that organization as a result of that. So it's really important to not only look at it as a system configuration and optimization exercise, but also as an evaluation of your team and their staff and their competency and training to be able to effectively use the tools that they have. Because you'd be surprised how often that is the root cause of the dissatisfaction with the system. It's not that the system isn't optimized or configured properly. It's that the people who are being asked to use it aren't equipped to use it because they haven't had the proper training and education. So once again, when we think about this, why don't we do it? Well, half the time we just don't even know where to begin. We know that we need to do something, but we just don't know what. Sometimes you look at it and say, you know what, we're so busy right now. I've got the auditors coming in a couple of weeks, or I've got this big board meeting, or I've got annual budget process coming up, you name it. I can come up with an excuse list 50 items long for why we're too busy right now to do something like this. Sometimes it's not that. Sometimes it's just like, well, I don't even know where we're going, or we don't have any vision for what's needed. So I wouldn't even know how to answer questions about the strategic aspect of this project. In some cases, you might have senior leadership in your organization that aren't bought in. They're reluctant to spend on anything that's not program or service related. And it's understanding. I understand why they feel that way because of how the marketplace evaluates and judges nonprofit organizations. But it's really important to make sure that that's not a permanent obstacle, that there has to be some demonstration of ROI for them. And then finally, I mentioned ROI. You need to have some way of quantifying the ROI, or it's going to be really hard to say, yes, we're going to spend some money, invest in evaluating and potentially rejuvenating the system that we have in front of us. So some areas to think about in terms of ROI. You're probably here because there's opportunity for improvement in the area of efficiency. So you're losing staff time to both manual processes and duplication of effort. You have indirect costs associated with the lack of visibility. The timeliness and accuracy of your financial and operational reports to stakeholders causes that information to be diminished in value. People aren't able to make good decisions based on data because that information just isn't available, or they're having to do that keep a kind of a secondary set of books on their own to understand where they are all the time, which is another loss of efficiency among those decision makers. But probably most importantly is that it's really hard to behave strategically as an organization if you don't have the information that you need. If you're down in the weeds, if you're constantly looking backwards and you're trying to catch up and you're trying to comply, you really can't have a strategic focus. It's really, really hard to focus on the future when the past has your undivided attention. And as accountants, that's kind of what we're trained to do. It's like, well, I can't do anything about last month until I'm transaction complete. I've got to get my month-end financial statements complete and things like that. And so as we're thinking about complying with the requirements of our job, we're not thinking about the strategic opportunity for the organization if we take it a step further and say, great, let's automate the compliance piece as much as we possibly can so that we can dedicate our team's energy and focus to providing strategic value to the leadership of the organization. So if you were to work with JMT on a BPR, what would you get? Is it worth it? Let me just kind of lay it out for you what you would get in return for the BPR. First of all, we would come in and we would do a very, very thorough discovery process with you. This includes interviews with senior management so that we really understand the strategic goals of the organization. We would not only take that information, but we would also document it and make sure that we've got agreement as to what those goals and direction are. And we would want to make sure that we are in alignment with senior management specific pains and the benefit of solving those pains so that we can really understand what is your organization aspiring to, what do you stand to gain, and what direction should we be looking. As we go into it, we're going to take it down a level and start thinking about, okay, let's get into the day-to-day of finance at your organization. We're going to talk to all of the functional areas. Sometimes they're separate. Sometimes they're different hats that a single person wears. But we need to understand your business process and workflow around AP, AR, cash management, payroll and HR, and every other different aspect of the financial activities of your organization. With each area, we're going to look at down to the task level and understand the pain points and where those issues and opportunities are. And like I said earlier, we also want to understand what's working well so we don't break anything that's working the right way for your organization. And we also want to make sure that we look at the system design for your system. So if we're talking about the general ledger, we're talking about the segment structure or dimension structure of your general ledger system. We want to look at the configuration of the related modules and how they're working together, and how those reports and other outputs from the system are set up so that we understand what's working there and what needs improvement. Once we have all that information, we're going to turn that around into a detailed report of findings. And so this is not a page. This is actually a full-fledged analysis report. And it will include our learnings, our recommendations, and our understanding of the benefits of those recommendations based on the input of your team. So what's involved? So we're all busy people, right? Who's got time for this? I don't have time to sit down and do all this stuff. Well, this is what it takes. We're gonna ask you to provide some documentation before any face-to-face meetings, and so there'll be a little bit of homework. So we want to see some financial reports. We want to see any type of documented processes and procedures, anything like that that you have that you're able to share with us ahead of that meeting. What that does is that helps us to optimize our time in person with you so that we can come in with a list of questions and ideas before we sit down in your office. We come to your office and we'll spend a day to a day and a half, depending on the size and complexity of your organization, working with those different groups of people that I described on the previous slide. And this is gathering information, understanding issues, goals, priorities, all those things that are going to be related to that findings report. After that meeting on site, we're going to go off. It usually takes about 2 weeks from the time that we have that on-site meeting, and we're going to be putting together that findings report, and that findings report with the recommendations and what we believe that you should do. And that findings report will include not just the recommendations of what you should do, but our best estimate of what it would take investment-wise to get you where you need to be. So, like I said earlier in the call, we've got an opportunity to potentially do very minimal, maybe some training and some tweaking of your current system. It could be a lot. It could be adding lots of modules or bolting on a third-party tool to address a particular business process issue, or it could be fairly revolutionary. It may be, this system in front of you is not appropriate based on all of the growth and change that you've been through since you implemented it, and in which case we would lay out what we recommend in that scenario and what it would take to get that done. But it's really important that we put all of the facts on the table from you and allow you to validate and understand it. During that 2 weeks that we're working on that report, it's entirely possible that we would reach back out for additional information or clarification on anything that came up during that day and a half. But we want it to be comprehensive. We want it to have there to be consensus that our understanding of the facts and circumstances are correct, and that hopefully you agree that our recommendations are in alignment with your goals. The most important thing, though, is we don't want you to feel like you're stuck because you don't have the time or the resources to figure out these things on your own. This is why we're here for our clients, and this is where we believe we can add the greatest value. So what does it cost? So the investment, this engagement is a $7,500 engagement, and if you take any of our recommendations from the summary of findings, then you get a third of that back in the form of credit towards any of the services that would be delivered by JMT. So just so you know, there's somewhere between $5,000 and $7,500 is what your cost for this engagement would be. If you have an EVP contract, extended value plan with JMT, that service discount can be used for this engagement. But the one that's hardest for people sometimes is just the team's time. So we try to limit that to that 1 to 2 days and try to get it all done in one efficient shot so that we're not having to drag this out over a long period of time. So what do you get in return for that? Well, hopefully what you'll end up with, if you're able to take advantage of the recommendations, is to get more streamlined, to get more efficient, to get rid of the manual work. We want you to getting reports right out of your system with fewer Excel hours and mistakes. We want you to have confidence that you've got the right internal controls and processes in place to make sure that things run smoothly, that you're getting high marks from your auditors as they come in and take a look under the hood. But we also want your staff working on the right kind of stuff. We don't want them doing rote, repetitive, busy work. We want them doing things that are aligned with the strategic direction of your organization as much as possible. And also we want to make sure that you feel like you've got the system that's continuing to work for you and that it's going to be able to adapt and scale with you as your organization grows or contracts, depending on the situation for your organization going forward. So that's what we're offering for the BPR. Let me tell you a little bit about one client that we did this kind of project for a while back. The client was a science museum. They were about a 25 million a year organization. They had a finance department of 7 people. The reason that they engaged us for this BPR was that they felt like they were doing everything in Excel, reporting, tracking stuff, you name it. That was their answer to everything, just like I talked about before. They took forever to get financials out. They were, you know, the kind of caricature that we talk about all the time about financial reports and managers. By the time people got them, it wasn't just because they didn't care. It was because even if they did care, the numbers were so old, they weren't really that valuable anymore. And so the financial reports were just not timely, not available. Their systems weren't integrated, so everything was manually being transcribed between systems, which resulted in additional delays. And everything as far as their purchasing process was manual. So paper, signatures, routing documents around an office, and it really diminished the finance department's visibility into pending liabilities. So yes, there was a purchase request or a purchase order out there, but since it's paper, the finance department didn't know anything about it until too late, and then suddenly a giant bill shows up that was never accounted for. And so this is, you know, once again, it was all kind of diminishing the effectiveness of the finance team and their ability to serve the organization. We went through, we did the thorough analysis, everything I just described to you, recommended improved, streamlined processes for AP, purchasing, and AR. We gave them better tools and better process around their budgeting and financial reporting to improve the timeliness and value of those reports to the consumers of that information. And we helped them with the integration of all their third-party systems. So made sure the transactions coming from the donor system, the grant system, the ticketing system, they're a science museum, all that information was flowing in some automated fashion into the general ledger. So what they got from it, they ended up with a lot more efficient operations in the finance department. People were spending less time on manual effort and manual transcription of information. The staff was actually much more engaged when they were done. They got the monkey of Excel dependence off their back. They were able to reduce their dependence on Excel for routine reporting and analysis by 90% by simply optimizing the tools they had in front of them. They reduced the expense of operations, which means is a fancy way of saying they got stuff done quicker and put information in the hands of management and other stakeholders in a more timely fashion, which presumably helped improve the operational effectiveness of people outside of the finance team. And another thing is just really getting that month-end close time down, getting information into the hands of the people that need it sooner, and making them more effective in what they do. So this is one case, and every BPR ends up being a little bit different because every organization is different, every finance team is different, and you think of the diversity of funding, the diversity of regulatory requirements based on the type of organization. Everybody's going to have a different set of facts and circumstances, and so the BPR itself adapts to the circumstances of the organization. So your organization may have a slightly different outcome than what you see here, but the overarching improvement of efficiency and visibility is the outcome that we're striving for all of our clients. So wrapping up, I do have an opportunity for questions here. And so if anybody has a question that I can answer, I hope you can. You can either, I'll give you some options. There's in the GoToWebinar console, there's an opportunity to type in questions. There's also a chat feature if you'd rather use that. And Sam, if you're still there, I'm not sure if you are, if you can open up the lines. There's a few enough people on this call that we can let people just ask their questions if we want to do that.
I believe so. Okay, so we should look and see why, though. Yeah, I agree. Before.
All right, so let me do this. It looks like we're I'm not seeing anything coming through on the questions, and that's okay. So let me tell you how you get more information. So if there's a question that you have after we hang up today, what I'd like you to do is I'd like you to reach out if you need information right away to your CAM. So you see the CAM email address on there. But even if you don't, what you will see is you'll get reached out to by your CAM, just soliciting feedback on the session. Did you find this information valuable? If it was interesting and you want more information, they'll be happy to answer whatever questions you have about the engagement, timing, cost, logistics, all those things. If we thought it was interesting, but you don't really want to do anything today, that's fine too. Just let your CAM know that, and they won't bug you about it. But we just want to make sure that you get what you need. So like I said, if you want an immediate follow-up, email cam@jmtconsulting.com. Otherwise, over the next few days, you should get a call from your CAM looking for more information. I appreciate everybody's time and attention today. Thank you for coming, and I hope you found it valuable. Thanks a lot.
Thanks, Tom. Thank you.